Welcome back to another video in the trading den. I'm not sure which module this is. We're getting pretty deep into this, so I hope you are enjoying the course. And in this video, we are going to be going over breaker blocks. Now, breaker blocks are one of my favorite entry models because they are algorithmic. Now, you'll know what I mean, and I'll explain it deeper on why they are algorithmic in examples, and you will see exactly what I mean. So here is a depiction of what a breaker block would look like when it is formed. So we have a high here, a low, a higher high, and then we slam through this low, creating a lower low. So we have a run on stops, right? We have order pairing, and this is why it's algorithmic. So we have a market structure shift at this low. This right here becomes your breaker block. Now, any bearish breaker blocks are down close candles for a breaker block. Any bullish examples are up close candles before we break that high. So we make that move lower, getting displacement through this low. We come up and we should move quickly away from the breaker. That is why it's one of my favorite entry models, because if you're right, it will go quick. You'll know pretty fast if you are correct off of a breaker block. So let's hop into the charts and I'll show you some examples. So here we are on the NASDAQ 4-hour chart, and this is going to explain exactly why they are algorithmic. I know it's not as pretty on the higher time frame charts. Whenever we get down to the lower time frame, it'll clean up a lot, but right here we see we have a high, right? We have a high right here and we have a low. This right here is a lower low. So we have order pairing happening at this low, and then we have displacement higher breaking above these highs. This is why it is algorithmic, because we have a run on stops. We have a market structure shift. So a retest of the breaker block is going to give us a quick move out of there. So the last up close candle that made the high, so this candle right here, is your breaker block. So you see we come down, we tap into this breaker block, and then we move quickly and precisely away from this breaker. Here we are on the NASDAQ hourly chart. You can see we have this low here, we put in a low and we put in a high. We make a higher high, so we have a run on stops. Now we have order pairing happening at this high. So we have a high taken and displacement lower. Notice we have no body closures below here yet. Then right here, we get our market structure shift. This last down close candle before the move higher becomes your breaker. Oops, sorry. This becomes your breaker. Notice we don't open until New York session starts right here. So 8:30 is true New York session open. As you see right here at 8 a.m. hour, that's when we get that displacement lower to hit this draw on liquidity. So you see we have a low, we have a higher high, price makes a new lower low, bodies respect the breaker, then we get that quick move down at New York session. So here we are on the NASDAQ 15-minute chart. As you see, we have this low here, we have a high up here. So what is the market doing? Boom, 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 boom. So right here becomes your breaker. What do? These two down close candles become your breaker, right? It is the series, just like order blocks, it is the series of down close candles and up close candles that form your breaker. So here, whenever we get that closure below, we now come up, test this breaker block, and then we hit that overall draw on liquidity. So let's go into one more example. So here we are on the NASDAQ 5-minute chart, and we have actually went over this example a ton of times, but I never explained why this forms a breaker right here. So this happened yesterday, so actually not a ton of times, but we have what? Run on stops, order pairing happening down here. Also, we have that higher time frame PD array, right? Remember, everything I go over, you need to base a trade off the higher time frames. So don't just take a breaker just because it forms a breaker. Don't take a fair value gap just because it forms one. You have to always be trading off of higher time frame PD arrays. So right here, run on stops, order pairing, 1 hour fair value gap. I remember because I just made a video on this example yesterday. I forget what module that was. But then we come up, here's your market structure shift, right here, this last up close candle, right? We have a new high. This is the last up close candle that formed a high, that formed the new low. So this candle right here becomes what? Your breaker. You can use the bodies, you can also use the wicks. Just like order blocks, I only use the bodies unless, actually I'm not going to go over this yet. I'll go over that in my models video. But I usually, if I am taking a breaker alone, I will only take the bodies. So right here, this up close candle forms your breaker block. As you see, we hit that overall draw on liquidity. So as you see, most of these examples, we get price to move away very, very quickly. So once again, how the breaker blocks are formed. For the bearish side, we have a run on buy stops. So we have a run on buy stops, creating a new higher high. Then we come down, we make a new lower low, and then the down close candles become your breaker block on a bearish breaker. So high, low, higher high, lower low. That is all you have to remember a bearish breaker for. And then bullish breaker, we have a run on sell stops. Then we break through the high, and then the down close candles become your bullish breaker. So low, high, lower low, then we make a higher high, test the breaker, continuation. This is a really short video because the breakers are very simple, and I went over them in my YouTube video, but if you haven't watched it, I figured I'd just go over it right here. And if you know ICT, I'm guessing you already know this, so that's why I kept this video short and simple. So let's move on to the next module.